I've been saying for 2 or 3 years now that in crypto, a lot of the projects you see going on here are going to go to zero. But there are Amazon.coms in there somewhere. The major protocol layers, the significant network technologies, those are going to make it out here stronger than ever 2 years from now. But things are going to get shaken out now. The scams, the charlatans, the easy money guys, those people are going to get shaken out in the next 6 months, and you're starting to see that now.
Welcome back, everybody, to Altcoin Daily. Today is a dark day in cryptocurrency. Celsius is bringing down the entire cryptocurrency market. Celsius tanks 70% in 1 hour after company pauses withdrawals. They're a $10 billion company. A lot of people have a lot of crypto on this platform. And if you do, if you have Bitcoin on Celsius, you are no longer currently able to withdraw it. You cannot get access to it. This is to, as they say, stabilize liquidity. The crypto lender paused all customer withdrawals and swaps on Sunday night, citing liquidity issues. Cell token quickly went off a cliff. In today's video, I'm going to explain this simply, tell you what Celsius is, tell you why they had to pause withdrawals, why this is a crisis for the entire industry, and what to think about going forward, particularly if you have money in Celsius, and particularly if you're in crypto at all, because this truly affects the whole market. We'll hear more from Brian Brooks in just a second. If you appreciate our daily videos, smash the like button and let's jump into it. The Celsius blow-up explained. First of all, it seems like huge sectors of crypto have been imploding over the past couple months, and crypto unicorns might be coming down with it. Luna was first, and now 10 billion giant Celsius is facing insolvency and even bankruptcy, allegedly. Let's dive in. First of all, what is Celsius? Well, Celsius is a decentralized DeFi company that custodies and manages crypto on behalf of investors. They're basically traditional financial services for the crypto industry. They take your money or they take your crypto, they promise you a fixed interest rate, and then put it on chain and use it in DeFi to earn a yield. So they advertise that their services are like that of a bank. The service is almost more like a hedge fund or asset manager. These strategies have some risk involved and require supervision. So how exactly do they make their money? Really two different ways. Number one, originating loans to institutions and individuals. And number two, they keep whatever profits are left after running strategies on behalf of their customers. So if they advertise 5% on USDC stablecoin deposits, then swap that USDC to make 20% on, say, Terra's stablecoin, UST, they can keep 15%. And Celsius did phenomenally well with this throughout 2020 and 2021, reaching a valuation of $10 billion and recently raising $400 million. The only issue? They kind of manage their funds like degens. Before we continue, let me clue you in to the opportunity that is FTX App US. Go ahead, scan this code with your phone right now. Scan this code with your phone right now. Download FTX app. In my opinion, it is the best centralized exchange to trade crypto on. Why do I like FTX app? Because you can trade crypto with zero fees. It doesn't take much to get me to use your exchange. If you say I can trade cryptocurrency with zero fees on your app, I will be downloading this app. If you tell me that you're going to incentivize me by giving our audience $100 for free, all they have to do is type in Altcoin Daily and get up to $100 in free crypto, I'm definitely going to try this app out. Maybe at this point you're using Coinbase, maybe you're using Gemini. I highly encourage you, check out FTX App US. In my opinion, it's one of the best crypto apps around. So let's break this down. What events exactly led Celsius to halt withdrawals? What happened to the money that they have on their platform? Part 1, the Luna collapse. The Luna collapse shook the industry and made waves in mainstream media, maybe the biggest wealth destruction event in crypto, and Celsius was involved. Luna promised 20% interest on USD-pegged stablecoins, making it a super popular product advertised as low risk and even risk-free. But when markets began to shake, the mechanism to hold that token at $1 failed, leading to a death spiral and the failure of a 40 billion protocol. And as Luna collapsed, many speculated about big institutional players losing their shirts on their holdings. And Celsius, who promised strong rates on stablecoins, was exposed to the collapse by holding maybe up to 500 million in UST. And that's the customers' money that they lost, by the way. But they had a buffer, at least, right? Hopefully they did. Brings us to part 2, LIDO staked ETH. For ETH deposits, Celsius promised 6 to 8% in interest, with a lot of it likely earned from staking rewards on the proof-of-stake Ethereum beacon chain. The biggest issue with this is that assets held on Ethereum's beacon chain currently are completely locked up. You can't unstake for now. Crypto protocol LIDO solved this problem by creating a liquid derivative asset called LIDO staked ETH or STETH. While STETH has often traded at a 1-to-1 ratio, it's not pegged, meaning it doesn't have to trade 1-to-1. But Celsius kind of counts on STETH holding its ratio at 1-to-1 because it needs to match liabilities. In a bull market, that worked out. But with a liquidity crisis and bear market, the STETH to ETH ratio, technically not a peg, began to slide. Leading us here to part 3, the unwinding. Celsius has likely failed to isolate their risk. This is alleged, meaning they might have taken their USDC and held it in UST, Luna's stablecoin, and they might have taken their ETH and held it in STETH. So, when all of crypto drops and all users want their funds back, all Celsius users feel the pinch. It's all the same pool of money. Celsius is facing a liquidity crisis, one in which prices that are spiraling downward make it harder and harder to match liabilities, the deposits on their platform, with assets, whatever they hold on chain. So they shut down the withdrawals. You can understand it like this. There are about 10 billion in customer assets in Celsius, but only about 1.5 billion accounted for in Celsius various wallets. So, in terms of matching customer funds to liquid assets, that's a clear mismatch. And that loss in confidence inspires more and more people to withdraw, which causes more and more people to lose confidence, which causes more and more people to withdraw, etc., etc. So, the big question is, if it's not liquid, where exactly is the money? Well, a few places. There is about 4 million staked on the Ethereum beacon chain. There's about another 400 million leveraged in Maker Protocol, which, by the way, has been alarmingly close to liquidation, although Celsius keeps topping up their position. It's important to note that these positions are often hunted by institutional trading desks. Firms will actively try to push price down to get these big positions liquidated, then make money on the trade when the forced liquidation goes through. And for the rest of the money, who knows where it is? Maybe it's lent out and on centralized exchanges and everything is kosher. Maybe not. So, how does Celsius solve this huge problem? Well, first of all, like I said, it's totally possible that they are totally solvent. They have enough assets, they're just illiquid. If that's the case, they can try to negotiate with other institutions' whales to offload big illiquid positions for a discount. However, if their assets don't match liabilities outright, they're kind of screwed, and they will require 1, external funding, 2, a loan, or 3, an acquisition. Nexo has already proposed to take over. Or they'll just go bankrupt, in which case all of their depositors are outright screwed. And that would be really unfortunate for anybody who has their money in Celsius. Not your keys, not your coins is obviously the safest way to protect your Bitcoin, as long as you're up for that responsibility of holding your own coins. But with crypto, with Bitcoin, you have that power. Here's the thing. Markets are obviously shaken by all this news, and these big institutions are becoming forced sellers. This is not a good sign. As always, this invites regulation, oversight, and legal action from governments, institutions, and critics. A dark day in crypto for sure. let's jump back to Brian Brooks to shed more insight on what exactly should we be taking away from this Celsius crisis.
Brian, do you have any more color on what is actually happening in some of these issues like a Celsius or Binance?
Yeah, absolutely. And listen, thanks for addressing this at this moment. It's kind of a crisis for the crypto industry. What I would tell you is you have a perfect storm of multiple things all happening at the same time. So first, you have Celsius blowing up. It's the second big centralized crypto project in 3 weeks to blow up. That causes people to think the whole sector is infected at some level, which it isn't, but that's a natural human reaction. The second thing you have is, Bitcoin had its enormous rise during a period of very, very high inflation building up in the economy. And now you've got Federal Reserve action and central bank action around the world taking aggressive steps to rein in inflation, which is a bad thing for Bitcoin over time as an inflation hedge. And then finally, every stock in the S&P 500, literally all 500 stocks are down by a significant margin today, specifically including financials. So it's a perfect storm. Everything that could be going wrong is. And I've been saying for 2 or 3 years now that in crypto, a lot of the projects you see going on here are going to go to zero. But there are Amazon.coms in there somewhere, right? Things, the major protocol layers, the significant network technologies, those are going to make it out here stronger than ever 2 years from now. But things are going to get shaken out now. The scams, the charlatans, the easy money guys, those people are going to get shaken out in the next 6 months, and you're starting to see that now.
Guys, everything is going to work out. The crypto market is getting battle tested as we speak. The weaker projects, the less legitimate, are getting shaken out. The stronger projects will come back with a vengeance. I want to encourage everybody, stick with cryptocurrency. The people who made the most money in 2021 were not the people that just showed up in 2021. They were the people watching us in 2018, 2019, 2020. And I believe that's where the biggest opportunities are made. The people who stick around during a bear market profit the most in a bull market. I don't think I'm the first to say that. Anyways, subscribe to the channel, join our team, smash the like button. Hope you got value in today's video. See you tomorrow.